Records and analysis. How should you keep your records? It is important that your strategy includes keeping records of activity for the private levy-proof bank account for the tax-free organization separate from records of activity for your non-private bank account for your corporation, partnership, or LLC. You may even wish to rent a safe deposit box for this purpose where you have the private levy-proof bank account. It is also important that your strategy includes keeping good records so you know what each organization is doing. Namely, how much taxable income you are generating through your taxable business and how much non-taxable income you are generating as agent through the tax-free organization. At the very least, this will allow you to compare how well you do with what you are learning to how you would have done without it. How can you make this comparison? An Excel spreadsheet containing estimated tax calculators accompanies this session for calculating your current year 1040 amount due and for calculating what your current year 1040 amount due would have been without the benefit of what you were learning. Once your financial statements are complete for each quarter, use the estimated tax calculations spreadsheet to estimate your income, Social Security, and Medicare taxes burden. Select the tab for the appropriate quarter just ended, fill in the green boxes to determine any estimated payment due for the quarter, and save the spreadsheet using the date of the last day of the quarter. Then recalculate without the benefit of what you were learning and make note of the differences between the annualized federal income tax and self-employment tax calculations. How can you determine what you would have paid without the benefit of what you were learning? For your first calculation, enter your total gross wages, if any, and your share of the profits of your S corporation, partnership, or LLC, which is 100% if you do not have a partner. For your second calculation, enter your total gross wages, if any, your profits as a sole proprietor, if you had not registered your business other than as a sole proprietorship before taking this course, and your share of the profits of your S corporation, partnership, or LLC, if you had already registered your business other than as a sole proprietorship before taking this course. And then adjust your profits. Add to your profits the amount of the total payments you have made pursuant to contract from your corporation, partnership, or LLC and deposited into the private levy-proof bank account for the tax-free organization. Subtract from your profits half of the business expenses you have paid for charitable contributions and meals and entertainment. If you originally registered your business as a C corporation and will not be electing to treat it as an S corporation for income tax purposes for the current and future tax years, your C corporate profits are not part of your estimated tax calculation for your 1040 amount due. Another reason it is important to contract for your labor and to keep good records is that operating with cash can be devastating to your financial prosperity. Although it is your constitutional right to accept but not record cash, under the watchful eye of the IRS, this is typically called getting paid under the table. Generating unrecorded cash revenues typically results in unrecorded and unnecessary cash expenses that also diminish your ability to accumulate wealth. Accordingly, recording and depositing cash revenues typically plugs another drain on your financial welfare. Email your first name, state, phone number, and the best time to reach you with assistance in regard to keeping records, using the estimated tax calculators, and or making estimated tax calculations for a C corporation. Advantageous application. How are you benefiting from all of this? With statutory and practical guarantees for your success, you are further reinforcing your wealth generating power as you implement all 5 steps for observing all 3 principles in combination for achieving maximum possible financial prosperity. In so doing, for example, an 18-year-old can achieve additional wealth of literally 40 times what he would otherwise voluntarily, and in most cases unwittingly, contribute in federal income taxes alone beyond the requirements of the actual language of the law. Let us review. Your 4th step is to begin systematizing your activity. Add to your strategy a specific plan to generate compound interest so as to realize maximum possible account value. A specific plan to keep good records so you know precisely how well you are doing with what you are learning. And a specific plan to arrange your personal taxable income to be below the taxable threshold so as to pay zero state and federal income tax, or at least pay as little as you wish according to your personal strategy. Use the document accompanying the third session to calculate your taxable threshold. Why settle for pathetic interest and never double your money when you can enjoy phenomenal interest, compounded, and watch your money double repeatedly over the course of your lifetime? What do you need to do? Once you have completed step 3, deposit the bulk of your revenues in the private levy-proof business bank account established in step 3, the bank account you established in another state or at least 2 hours travel distance from your operating location. First, execute a contract between your corporation, partnership, or LLC and the private, lawfully income tax-free organization. Second, generate as much revenue as possible as agent in the name of the private, lawfully income tax-free organization and deposit all of it in its bank account. Third, write corporate, partnership, or LLC, but never personal, checks to the private, lawfully income tax-free organization, pursuant to contract. Take deductions for everything your corporation, partnership, or LLC pays, pursuant to contract, to the private, lawfully income tax-free organization. Deposit these checks in its bank account, and pay your business and personal bills from its bank account, although it is best to continue paying your mortgage, car payments, and any other bank loans in your personal name from your personal bank account. If you are an employee, submit an updated W-4 payroll withholding allowance certificate to each of your employers to reduce the amount of federal and state income tax withheld from your gross earnings. With the goal of reporting less taxable income than your taxable threshold on your next income tax returns, indicate as many as 9 withholding exemptions to limit your income tax withholdings. With the 5th session, you will begin implementing the final sub-steps for capitalizing on the compound synergy for achieving an annual 6-figure tax-free interest income for the rest of your life.